Hey everyone, and welcome back to another video for today. So in today's video, we have a couple of things to discuss, and let me tell you, it is going to be a wild ride, because the market, it is a fickle beast, isn't it? I took some profits, and I'm considering buying a new position, because, sometimes you gotta dance with the market, and sometimes you gotta tell it to take a chill pill. I did already buy more SoFi, because, hey, if Anthony Noto is looking at buying Leaps, then one, I should maybe also go and buy Leaps. And two, I could start by just buying more shares, which is exactly what I did today, because sometimes you just gotta follow the smart money, or at least the money that thinks it is smart, then Micron. Oh, Micron, the little engine that could. Micron is a trillion-dollar company that many people completely ignored, and Micron is a 10 times for me, a beautiful, beautiful 10 times. And so I did take some profits off Micron, around 50%, actually of what was left of that glorious position. Why is that? Well, I'm quite happy with the returns. Extremely happy. I'm quite happy with the returns, and I'll explain all the rest in a bit. But sometimes, you gotta ring the register. You gotta take some of that sweet, sweet cash off the table. Because paper gains, my friends, are just that, paper. I'll also take around 56% of profit from AMD, because AMD is now $53 per share. Can it go higher? Of course it can. That is why I'm still exposed to that name, because even when you take some profits, you don't want to completely abandon a good ship, do you? Now, as you know, we've been talking about some other companies out there, likes of Shopify, Axon, Reddit, some other companies out there that I don't own. Not yet anyway. They've not really participated in the bull run. The big fancy bull run that everyone's been screaming about. But the business? Oh, the business has been doing very well, quietly, elegantly, like a ninja as of right now. I did not add to any of these names, but I am looking at these names right now very, very closely, like a hawk eyeing its prey. Shopify, Axon, and Reddit DCFS are of course available to you for free on the Google Drive because I believe in sharing the wealth and sharing the knowledge. The link will be down in the description below. And I'll show you the Reddit one in this video because we did already cover Shopify and Axon in another one. Gotta keep things fresh. Now, another one. DJ Khaled can pop up right now. Another one. Now, as you can see, despite all of these so-called momentum, the market things that we're having with the discussions, deal, no deal. Yes, deal, no deal. It was still a lot of red, a lot of green as well in the market, a chaotic dance of numbers. Then the green, the glorious green, is the usual suspects, the ones everyone loves to talk about. AMD was up 7.7%. We have a Micron that is up close to 20% today, 20%. Can you believe it? Clack is up 6.5%. Texas Instrument 5%, GE is up here 3.8%, SanDisk 7.5%. So that is now a $235 billion company, big money, right? So the usual suspects are going up, no surprise there. Everyone loves a winner, but guess what? Nvidia. Oh, poor Nvidia. Nvidia couldn't even catch a break today. The mighty Nvidia was still down 2.2%. So Nvidia, the company that basically enables this whole ecosystem, I think that is fair to say, does not participate in all of this. The kingmaker is taking a nap. Now, you could say, yes, okay, but Nvidia is a $5.2 trillion company. Hello. It cannot go up every single day. Of course not. Even superheroes need a day off. Okay, fair enough. But it is not like it is trading at 50 times sales, 50 times earnings. Not even close to that. So what gives? And by the way, Micron is a trillion-dollar company that just went up 19%. 19% in a day. That is a party. So Nvidia is worth 5 times Micron at the moment, and Nvidia couldn't catch a break. Actually, more than that, as you can see right here. It is a strange world we live in. And actually, before we do that, this is basically what I did. 24 shares, 50% of the position. That was what was left of my Micron position. An 880% gain, selling 50% of what is left. It has been an amazing ride, a roller coaster of profits. But I'm good. The trillion-dollar club. Could it go higher? Yes. I don't care. Because whatever is great, if it goes higher, I'll benefit from that. And I'll probably close out the position if we do go above $1,000 or so, because I do think that I'll be more relaxed if I have it in cash, or if I put it in another name where I don't have to think about, oh, will the hyperscalers increase or decrease CapEx? What will happen with memory? Will software be making memory cheaper? Or maybe there will be less demand, and things like that. Because stress, my friends, is expensive. Because remember, we are currently experiencing this. The cost of something decreases by half. Then the demand increases by more than half. It is basic economics, but so many people forget it. We've seen that happen with tokens, for example. Now with memory. Again, the whole thesis behind me buying Micron over a year ago is because HBM is not the commodity, or at least not yet. It is a diamond in the rough. But then again, they are also working on custom HBM for the future, so they're not sitting still, they're innovating, they're pushing boundaries. But memory was seen as a commodity for many, many years, a boring, uninteresting commodity. So of course these companies didn't get a huge multiple, right? Micron, SanDisk, SK Hynix, I mean all of them, SanDisk, you name it. They were treated like the ugly ducklings of the stock market. But right now, with HBM, there is just so much demand, so much hunger for this technology. There aren't that many players that can make these things. It is a niche market, but a lucrative one. And that means more demand, not enough supply. Prices go up. Insane margins. It is a beautiful, beautiful thing. For now, okay. But what happens when these companies, all of the hyperscalers of the companies, all of NVIDIA, etc., they figure out a way through software to use their existing memory capacity more efficiently and maybe use it even more than what was expected? Because innovation, my friends, never sleeps. Well, maybe then these companies, either there is going to be less demand for HBM, which I don't think will happen, or the cost of HBM comes down. The cost of HBM comes down. It is a race to the bottom, but a profitable one. Yes, you can still increase your revenue, but your margins are going to peak pretty soon, which means again, the cost will come down, but the demand will increase. It is a delicate balance, a dance on a tightrope. I don't think there will be less demand for memory, a year, 2, 3, 4 down the line, because more and more apps, more and more products will pop up. Thanks to AI, you are going to need more memory. It is an insatiable hunger, but the cost of it is going to come down, which means margins are naturally also going to come down. By how much? And when? I don't know. Nobody knows. But in the meantime, let's focus on what has been happening year to date, the here and now. So I've put here Microsoft, Google, Amazon, Meta, the QS, and the S&P, a collection of the titans. What can you see right here? You can see that two names, one is Google, the other one here is Amazon. Only 2 names are beating the QS and the S&P, right? Because the EQs are up 17%, S&P 9.1%. That is it. The big boys are struggling to keep up. And I'm talking here about the hyperscalers and the big tech company that is Meta. That technically speaking, if Zuck decides 2 quarters down the line to say, actually, we've reached an agreement with, I don't know, Entropic or whatever, to license compute. Poof, this thing goes to the moon. As you might have expected, a rocket ship to the stars. But you can look at this. Meta down 6.2%, Microsoft down 12.1% year to date. Not exactly lighting the world on fire, are they? That is not all. Let's have a look at the semiconductor names, shall we? The unsung heroes, memory as well. Here we have one name that is Intel up 204% year to date. Intel, the sleeping giant, has awakened. Then we have Micron 138% year to date. Still chugging along, still making us money. Then we have AMD 109%. A consistent performer, a reliable friend. What do we see here? The QS again up 17 and the S&P 9.1, with NVIDIA being up just 14%. Look at how much NVIDIA is trading these other names, and barely catching up with the QS for this year. It is ridiculous. Absolutely ridiculous. The king is struggling to keep his crown, moving on to the neoclouds, the new kids on the block. We have Nebus here at number 1, 138.8% up year to date, soaring high, white fiber up 79.4%, applied digital 63.2%, and then we've got here some of the rest, 33.6, 31.1%. That is for iron and core, so they are outperforming the QS and the S&P. They're definitely outperforming NVIDIA. Definitely outperforming a lot of the hyperscalers. Big tech companies as well. The underdogs are winning, and I love it. Why do I mention this? Well, I mention this because a lot of people that probably own NVIDIA. I know a lot of people own NVIDIA, not just year to day. They've been owning it for many, many years. A loyal fan base. But I see the sentiment around an NVIDIA, Meta, and Microsoft. Like, oh it doesn't make any sense. Why are these stocks not going up? I should be chasing the other ones, right? Everyone's always looking for the next big thing, the next shiny object. I see a lot of people trying now to chase what they've missed out on, trying to chase these names, these high-flying names, the ones that are already gone. And of course, nobody wants to look at these names right here. Nobody wants to look at the names that are beaten down, the forgotten ones, the ones everyone's given up on. If you look at Axon, that is down 31.5%, a significant drop. If you look at Reddit, 41.4%. Ouch, that stings. Look at Shop, 34.5%, year to date only. And as you know, the list goes on and on and on. Whether it is Salesforce, Adobe ServiceNow, you name it, some cybersecurity names. We're going to have a quick look at Zscaler. They're reported as well. But nobody wants to look at these names, yet many want to look at the names that are up significantly, the ones that have already made their move. Now, on the one hand, you can say it makes sense. You follow the momentum, right? Why not? You follow the momentum. Why would you go against the market? Everyone loves a winning streak. And you know what? I would agree with you in the short term. In the short term, I would, yes, agree with you. Why go against the market? It is a dangerous game. And I've said it before I made this mistake before. But yeah, you adapt, and you're like, okay, you know what? The market hates these names. The market is a cruel mistress. And by the way, a lot of these names, a lot of these software names, yes, they are down quite a lot year to date from the 52-week highs, the last 12 months, 3 years, whatever, that is true. They've taken a beating. But don't forget that a lot of these names were also getting a high multiple. They were trading at insane valuations. And so just because they're down 30, 40, 50, 60% or so from their all-time highs, does not make it an automatic buy. A discount doesn't always mean a bargain. A lot of these names, yes, are becoming very cheap, are becoming undervalued. But a lot of these names were also trading at a higher multiple right now. The market is still, if you don't know why this is happening, it is happening because not the SaaS apocalypse. Oh, cool name. No, it is happening because they had the business model, and maybe with AI, the business model has to change. And so maybe margins are not going to be super high as before. Maybe the new business model will have lower margins. That is the problem right now. The market just doesn't know. It is a guessing game. If they don't know, they shoot first and ask questions later. It is the Wild West out there. But that said, this also provides long-term investors great opportunities to buy into great companies that were always trading at an expensive valuation and have gotten either cheap or less expensive, which opens the door for us to accumulate more shares, to scoop up some hidden gems. In my case, yes, it is looking at an Axon, a Reddit, and a Shopify, the ones no one wants to touch. Now, before I continue, you know what to do. Hit all the buttons, the like button, the subscribe button, the notification bell. Would really appreciate that. Want to support me even further? Do check out the link down in the description and let the pin comment with the top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. You guys are the best.